social engineering.
Hello, everybody. It's your boss, Joe Boss. And welcome to another week ahead daily plan. Man, it's been quite volatile on a lot of these USD-based pairs. Quite volatile, except for the New Zealand dollar, of course. That one's held up probably the most. You can see we had a short trade here going into end of week, but this is why you set up stops. You get just a bit close. Now, I'm gonna do this on the stream, adjust my drawings, and you can see we got it. Not exactly in time, right? We were, call it 1 bar off here, but we did get it. We did get our high at the peak, even though it's kind of here at the edge of the peak. There's still room into the RB&Z meeting where you could still go a bit higher. Again, it depends on how hawkish that central bank's going to be. But it doesn't seem like they're going to hike. What we're mainly looking for is during their speech and during their minutes and during their statement, that they give the market some new information to help set expectations for when in the future they'll be cutting. And if they don't cut, if they stay moderately, call it hawkish, right now the expectations are for cuts into the third quarter, which is, the Fed will be cutting by then, the ECB would be cutting by then. And that could provide some more positive drift to the New Zealand dollar. But in more immediate news, we had this stuff going on here. This crazy candle here on the euro dollar. It also impacted the Aussie and I believe the pound. Yeah, the pound's holding up a bit more, but I still think that the negative drift is going to be coming in here on this one. Dollar CAD also, it made some improvement, but it's probably in the same camp as the pound. But it looks like euro dollar still following the expectation, will probably be within some margin of error of this expectation here. I should zoom in. For you guys on mobile devices, FYI, if you're watching on a desktop, you can view this in 1440p if you got a 1440p monitor or higher. Anyways. Yeah. I was particularly concerned about this high. I was actually watching this thing actually close to midnight when it happened. I got like 4 or 5 alerts as we were crossing above here. I'll go ahead and pull up probability pivots. And when we were up here, I'm like, oh man, it looks like this expectation isn't going to get met. We're probably going to end up closing somewhere up here in the upper 108s. But no, as soon as you had the pullback, I'm like, well, now it's kind of 50-50. Either this thing comes back down far enough to close in this range, or it's going to keep zipping up and down, up and down. So at the current point, I would still set this as my expectation that will close in the low 108s into the end of this week. If we had ended up closing up here or somewhere around here in the last 12 hours, I probably would have been drawing a new line, setting my expectation for more positive drift to close higher up here. But I wish I was looking at the highs instead of on the closes, because you only go past this R2.5 pivot at 109 here about 9% of the time. So I would have taken profit around here if I had looked at that. It's just once we start trading around in these gray spots, it can start to become a guess as to where the high is going to end up coming in. But we had immediately after the French PMIs, which took us to these highs. We were trading all the way up here at the French PMIs. And then I waited for the German PMIs to come out. And if the German PMIs also surprised to the upside, I was like, dude, this thing's going above 109 like right now in the next 15 minutes if those German PMIs surprise like the French did. And if you're not familiar with the flash PMIs, these particular indicators are the preliminary readings to the actual official PMI prints. So you can see here, here's the UK composite manufacturing and services flash PMIs for the UK. And if we go here, here's the French, and here's the Germans. So as a quick review here, the forecast for the composite, we'll just look at the composites here, which take manufacturing and services together. The composite PMI flash for the French was 45, and it came out at 47.7, which is huge. So the prior number was 44.6, forecast was 45, and the actual was 47.7. And most of that actually came from the services side really popping much, much higher. They were expecting essentially a sideways movement, and we got this big jump. And I mentioned, not only in the stream, but in writing, hey, we have serious risks of seeing more upside here about 5 days ago on these PMIs, because I'm reading outlooks, I'm reading what the people who are writing these PMIs are saying, and they're all pointing out, hey, there's some upside risk here. So this is from 5 days ago. And right here, this ends. Flash PMIs, if they print improving values, can continue moving risk on assets positively into the end of next week. Now, when I say end of next week, this was the 16th right here. On the day, this was the final trading day going into the week ahead, which is right here. And yeah, that was the right call. And early into the following week, though. So that would have been over here. So I don't think we're going to see continued move significantly higher into the following week, but we have to go ahead and check the indicators now. And one of the major reasons why I'm now expecting that is because these German flash PMIs didn't meet expectations. In fact, they came in a bit lower. The services PMI came in effectively as forecast, which is nominal, which is good. But the manufacturing flash PMI really tanked in Germany, and that hurt the composite. So it's a bit mixed. It created a bit of volatility where all the way here at the top of this candle here, and I can go to a 15-minute chart to illustrate this. This here was the French PMIs. You were all the way up here on this bar. And then here, and you can even see it lines up on the calendar, so 0015 is this bar here, and then 0030 is this bar here. So the Germans came out and pushed it lower, and then it just kept reversing. Then we had the Fed speeches come out, and some of the Fed speeches were actually on the dovish side. There's some participants in the Fed who are more dovish. In fact, I saw something on Twitter talking about how Bloomberg sent out some news, some of the speeches, some of the minutes, and they had left out some of the dovish comments from a few of the members. But apparently they were added back in, or there were other pieces of news that were appended to it. So the FOMC getting kind of uncertain. Should they or shouldn't they? Right now, June looks like the most likely time for a rate cut. And we're trying to figure out the relative policy here between Europe and the FOMC. So we'll have to see. Don't get me wrong, these are nice improvements, but the mixed sort of results essentially keeps the ECB in the same spot as far as their policy goes, in my opinion. I don't think these flash PMIs are going to change too much the opinion of the ECB specifically because it's not so you could call it a widespread recovery across the Eurozone. You can actually look at the Eurozone flash PMIs here, and they effectively came in as forecast. The services, the composite came in well. The manufacturing came in slightly below the forecast. But I think the next couple of PMIs will give a better indication of if there is some sort of positive growth recovery trend going on in Europe or not. And this is why we read our outlooks, guys. So we can say, hey, this event is a risk event for more upside. And then look at the other events, take that information into account, and actually figure out what it is exactly we're doing. Because again, this is all discretionary. All this is completely discretionary. So you got to read outlooks. I mean, the number one thing outside of these indicators, because while I do like the statistics indicators, I was actually talking to someone last night about, hey, when I was trading COVID, I used no indicators. I didn't use any of my indicators. Now, I didn't have these particular indicators during COVID, but I had some indicators, but I didn't use any of them because I knew exactly what I was doing. I mean, the most helpful signal for trading COVID was not a technical indicator. No technical indicator could have helped you. The most important thing was following the news of, hey, there's these growth in cases and they're spreading around, and now there's rumors of the borders getting shut down. I mean, being aware of what's going on in the world is more important than trying to solely rely on what's going on with your technical indicators. So it's important to, read your Bloomberg articles, stay up to date on political news, frankly, because political policy can change monetary policy, can change how central banks approach the economy, because they have to deal with the inflation of the fiscal side of things. It's incredibly important to have an understanding of what's actually going on, especially in FX, because it's all global macro stuff that you have to take into account, and relative rates of change between two countries and their economies and their policy and whatnot. So this is why I stress going out of your way to read outlooks. Like if you bank at a major US bank or a major European bank, there's a pretty good chance you can get access to outlooks directly from your bank. And you can have guys who've been writing outlooks and doing economic analysis for many decades, who have access to some quite proprietary information and analysis, frankly, on what the expectations could be going into the next week, the next month, the next geopolitical event. And outside of the indicators, reading those outlooks is probably the one single best piece of information you could use to improve your expectations. Just listen to what the people who are smart at your bank are saying and figuring out what their expectations are. But then when you go and you read more outlooks, you get a more well-defined view of the overall expectations of the market, because all these big banks are big players. So if you understand, oh, the expectation of this bank is bullish, expectation of that bank is bearish, and then in some of these outlooks, they'll actually tell you why they think what they think. And that's where you can learn a lot about how to formulate expectations going out into the future, going out into important economic events, how to interpret them. And it helped me out quite significantly, to the point now where I can pretty much do this without reading outlooks. That's because I've been reading weekly outlooks, monthly outlooks, yearly outlooks for at least 5 or 6 years now. I mean, I get like 200 emails a day at this point. I'm subscribed to so many newsletters and so many outlooks. But I go through them because I want to make sure I know what I'm doing. And I know later today and tomorrow and on Saturday, Friday, between Thursday to Friday, and actually you can include Sunday, some institutions release on Sunday. Between Thursday to Sunday, there are all sorts of institutions that have their commentary released. And it's important to follow up and read through them, because you never know when someone's going to drop a particularly insightful piece of commentary. So yeah, it's important to read your outlooks. That's a really, really good way of figuring out what expectations are going into an event and what some of the risks could be. And, you know, all those guys are licensed. All those guys have clients at those institutions. And you might be banking at one of those institutions, and you can get that information, or even talk directly to those analysts and ask them any question you want. A lot of these guys have like their phone numbers and their email addresses in these reports, and you can just ask them one or two simple questions if you're confused about why this thing is important, or why that thing makes sense to them, or what are the implications of this for such and such asset. Again, if you bank with a particular institution and you're a client of theirs, it totally makes sense that they respond. Yeah. Anyways, let's get into the week ahead expectations here. We'll start off with the DXY, to be frank. This is probably the best place to start, in my opinion, when it comes down to at least doing the roundup where we look at the FX pairs, and then we go and look at the commodities, and then we go look at the equity indices, specifically the futures. And then we'll look at crypto. We'll look at our Bitcoin and Ethereum. Let's go ahead and do our week ahead here. Hopefully you guys enjoyed the little rant on, hey, just like you got to eat your veggies, you got to read your damn outlooks. Anyways, let's go ahead and let's go ahead and hide these indicators here. Yeah, there is definitely some upside potential here into next week. Potentially just a lower high compared to over here. So if I were to set an expectation, it would be somewhere up there. But let's look at all of the data we got available here. Yeah. See how this says 18, 18, 18. These are all the same. It's effectively a guess where the low comes in this area once you start trading in here. And a lot of closes are more biased towards actually closing up here. So while the highs are likely to be up here, this to me implies that you get a down and then an up and then sideways. So if I could draw this out in arrows, it would look something along the lines of this. Roughly something along these lines here. Again, red is down, green is up, and blue is the closing. That's what I use the colors of these arrows for. And when I timestamp them, they become a visual representation of what my expectations are. That's what all these things are. And I feel pretty nice about having 2 weeks in a row, at least on the DXY, pretty consistent. You can see I'm definitely not always right, but that's why I don't delete these arrows. Because when people ask, oh, what are your trades? What are your expectations? I can just pull up my chart and I can go, oh, yeah, this is everything I've done publicly. These are when I'm doing trade plans. You can see when I set an expectation and what the expectation exactly was, and you can see how closely or far off I was wrong. Or right, at least in these two cases here. But definitely not there. Definitely not there. Frankly, it's also important that you set your own type of expectations, that you write it down or you draw them, and you be honest by not adjusting these lines here. That is, unless you did what I did here on the euro dollar one, and I'm like, yeah, I'm gonna show, actually it was on the New Zealand dollar one, where I'm like, okay, I'm gonna do this on the stream, I'm gonna adjust this little box a little bit further out in time so you can see, like, yeah, it did get into the zone, but not as far as I expected. Anyways, this would be my rough estimate. We still have another 36 or so hours left in this trading week, so depending how the rest of the week moves, it can shift the position of these pivots up and down. Same thing with these range probabilities. It can shift the location of these high density lows and high density highs. And you can see a lot of highs right around here. Let's actually check out our closing odds here, see how well that lines up. Yeah, wow. So the distributions line up with the seasonal expectations. I may need to keep adjusting these lines here so they line up with the expectation here. Something along these lines here. But I'm, as we trade over the next few days, if we end up closing up here or we end up closing down here, that'll shift these lines a bit. So I'm not going to timestamp these, but I'm going to leave them here. And as we do the stream tomorrow, I'll go ahead and timestamp these then. But I'm going to leave these here to illustrate, okay, for the week ahead, this is what I'm currently expecting. And then once we get to the close of tomorrow, I'll go ahead and actually timestamp and put the final values in here. But this is essentially what I'm expecting for next week on the DXY. It's just when I timestamp them, I don't want to move them. Okay, let's go into the rest, starting with the dollar CAD. Okay, a lot of closes higher up. It looks like dollar CAD might be a good one for that DXY setup. Looks like they line up quite well. Very much so. Thank you, Isaiah. Actually, there is, now that you bring it up, Isaiah, would love to see some links to the in Discord to your favorite email outlooks to subscribe to. I've actually done that over like the last 2 years as a Google Doc. If you go to the Outlooks channel and read the message of the day in there, there's a trade research document that actually has those links set up. So you just go to the Outlook's channel, read the message of the day, which is the description of the channel at the top. And there should be a link to a Google Doc that takes you there. I recommend starting off if you're brand new with Wells Fargo. Wells Fargo consistently releases special releases. They do monthly and weekly and yearly. And they also they don't use a terrible amount of jargon. They're one of the easier ones to start off with reading. So I recommend Wells Fargo for beginners because they're easier to read. All right, let's keep going here. It looks like the stream is buffering real quick. Just let me double check everything's good. Yep, everything's good. Okay. Yeah, this is... Oh, hold on. I am currently... There we go. I have to set this to auto. There's a feature in the indicator here where you can get the probabilities for any week you want, or any month you want, or any quarter. You can actually load this thing up on quarterly data if you bring up the weekly chart. It's not built in right now, but the settings are there. There are updates still planned for this indicator. But man, I've been busy. I do a lot of programming. I do like at least 3 or 4 hours of programming every day. And quite a bit of that also involves research, also involves learning any math I gotta learn. But yeah. Let's continue. So now, just as a rehash, this does still like it could be in play, but see this 25% probability here above the central pivot. When I've been trading this particular indicator for about the last, I don't know, like 3 or 4 some odd years now. And this 25% of lows next week above the central pivot, when I see this makes me think that a bullish continuation is more likely. So there's a potential that you just get a tiny little pullback and then something that looks like this on the DXY. 1/4 of the time you get just a rip roar where your low is above this central pivot. So that's definitely a risk to consider. But if we open below the central pivot, I'll be setting a bit more of an expectation similar to what we already had set up. And if we check out our high data now, yeah, there's a bit more craziness on the upside. And then there's some bearish continuation potential. And that makes sense. So this is going to be a particularly volatile and potentially choppy week ahead of us next week on the dollar. Yeah, this is definitely going to be a week to read up on those outlooks and figure out what the major economic events are next week, when they're trading, what the expectations are, how those are expected to print, why they're expected to print the way that people are expecting. And then going into those events, on the realization of those events, figure out if we need to change our expectations or go in line with what we were originally doing. This is where trade planning helps a lot. But now if I look at these close data points, they're going to be all mixed, right? Yeah. Some of your closes next week are here or really high up. Some of your closes are a bit bearish, and then these are crazy moves. But it seems like most of your closes are above the central pivot. Either they're a bit below, sort of range bound, and then that's especially risk off. So this is, yeah. We'll go ahead and go with the nominal trade plan so far, which is this. We'll leave that there. And as we get into the close of this week, we'll go ahead and set more realistic expectations. And we'll have some outlooks to read by the time we get to this point in the chart. Okay, let's go to dollar CAD. Continue on. Wow. Okay, that's interesting. I'll go ahead and grab my brush here. You got a cluster of closes here, cluster of closes here, and then a cluster of closes down here. So you would call that a trimodal setup. You got 3 distinct peaks next week. Now, this is a pretty small one. Most of the time, the close next week is somewhere here in the range between R1, S1, and quite frequently, more frequently than up here, are you getting your close for the week essentially sub 134. And we're currently at 134.8, so this could be 100 pips next week if the dollar gets particularly weak. So let's go ahead, keep looking at where likely highs are. Oh man, yeah, this does not look great for the dollar, to be frank. This looks pretty risk on. So I'll go ahead and draw a little preliminary line right here. We'll figure out how to adjust that as we go and read at the outlooks for the economic events in the week ahead. And yeah, you got 2 spots here that I like to point out. You got a peak right here, low probability there, and another peak right around here. So most of the time, the lows next week on dollar CAD are around here. Otherwise, they're going to be down here. So we really have to consider the likelihood of more risk on next week. What the risks of that are, what the likelihood of that is. And we can for now set a nominal expectation that we just go down to here. Essentially, this is range bound between R1 and S1 on these pivots is what I would consider range bound. And now we can look at our closing odds. And you can see the closing odds look like this nominally. If, again, you were to get something that looks like this, more downside, close is probably going to be below 134. However, nominally, most of the time, the highest probability is to close essentially sideways, up, down, and then up here. And that's just based off the probability pivots. We can go ahead and look at the ranges real quick. Got to reload them real fast. There we go. And that also lines up with our peaks. Here's our high peak here. Here's a low peak right there. Both of these peaks have your highest density of highs and lows. And then if we look at our closing odds, Yeah, maybe it goes a bit higher up. Maybe it comes down to here. And you can see you got a bump right around here where we pointed out these closes here. If I do an overlap, you can see there's a bit of overlap saying, hey, yeah, next week that's probably a risk. That's if things go risk on. Let's go to the next pair here. Glad you found it, Isaiah. Okay. Let's check this out. Yeah, this is... Yeah. When there's some skidding that occurs past this S1, it becomes a guess for the closes. Most of your closes, you could call them range bound, but up here there's something to closing up here. And that's why I set this expectation for this week. Low likelihood of closing the week up here. So I was setting the expectation, we'll probably end up still closing another 30 some odd pips lower. But New Zealand's probably going to hold up because they do have the RBNZ meeting next week, and we'll probably see a bit more hawkishness out of them. Ultimately, what will matter is after that RBNZ meeting, if it actually pushes out the expectations of a rate cut for them further into the year, either keeps them held into Q3 or pushes them even further out into Q4. We'll see. But right now, I don't think their next meeting is going to actually change those expectations too much. I think they're going to stay in Q3. Let's look at our high odds. A lot of your highs come in pretty close to here. So we can draw that. And let's look at our low odds. Ooh, yeah. A lot of lows are a bit lower here. Real quick, I'm going to check out the DXY. Yeah, so we said down, then up. So if we go to New Zealand, this would be up, then down. It's the reverse. And then we can look at our closing odds. And yeah, either sideways or a bit of a bounce higher. We'll put it in the middle. Again, I'll be updating and time-stamping these in tomorrow's stream. All right. Australia. It's a lot more uncertain where the close, my bad, is going to end up. A lot of the closes are around central pivot, but you can see they're quite dispersed here. You have quite a strong weighting up here. Let's look at our lows and our highs. Start off with the highs. Wow. Man, that is pretty strong. That is pretty darn strong. So maybe somewhere up to around there. And now let's look at our low odds. Yep. Looks similar to New Zealand. And then some risk of skidding lower once you go past that S1. Yep. This makes sense to me. Go ahead, check out our closing odds now. And then take it back here. So the common theme next week seems to be more along the lines of risk on a little bit and then risk off into a new low for the week. And then maybe the week closes sort of green or a little red, essentially sort of like a doji looking candle. And you can actually see here my Aussie dollar expectations were considerably more bearish. So while this expectation turned out all right, it definitely wasn't the high. Came in a bit higher than originally expected. So these two were definitely wrong. These expectations were absolutely not met. Okay, let's go on to now the euro dollar. So let's check out our high odds. Yeah, it's going to be a guess, in my opinion, looking at these highs. So let's look at our ranges. And depending on how risk on we are, I would say that the high comes in here nominally, but a lot of highs still coming up here. Might be helpful to look at the monthly. Yeah, I still wouldn't throw the baby out with the bathwater and say that this is out of the question in the last week of February. I still wouldn't say that's totally out of the question, but it's just such a crazy move. I'm just going to go with the nominal expectations for now. And let's look at our low odds. Wow, a lot of lows coming around here. But you still have this thing here. Remember, 20+% of lows above the central, you end up with good bullish continuation odds, where the low is just very close to the open for the week. But let's not assume that for now. Again, that's something we'll have to do in tomorrow's stream. So maybe something along these lines. And then, okay, let's go ahead and check out our closing odds here. Yeah, it'd be interesting if we get these sort of more volatile snaps. All these trade plans are starting to look pretty similar, right? Risk on, make a new low, and then rebound into a close where maybe the week close is a bit green or a bit red. Okay. Let's go on to the indices. ES. Wow. Well, looks like we hit our expectations of a down move and then up, but we're not getting our close here. And we have exceeded our expectations here a bit on the high end. So we'll have to see over the next, call it 2 trading days, how well we hold this spot here around 5,100, or if we pull back towards the middle of 5,100 over the next 2 days. Again, Nvidia earnings were quite good. It's just a matter of, is the rest of the stock market actually doing okay here? Next week, though, I'd say you do have a bit more skew to closing bullish. Yeah. So let's put that there for now. Look at our low odds. Set that to green. Yeah, so maybe something along these lines of down first, red, and then up, something like that. Because 50% of the time, the low next week is in this 50-point range next week. I wanted the highs. Yeah, I might even be a little bit more conservative than even that. Yeah, something along those lines. And also, when I say something along those lines, I actually have lines to reference. Yeah, if we do get this play out, I would put a bit more of a positive drift in there or set more serious negative expectations on the close there. But for now, let's go with the nominal expectations here. All right, let's go to NQ. Interval not available. There we go. That's what I wanted. So we had very similar view also on the NQ. But I bet the odds are going to look a bit different. Yeah, you can see they're quite split. They're actually a bit more bearish here. So maybe we see a high around here. Wow, it's like close to 60% of the time your top is in this 400 point range. Call it 300-ish point range. Okay. Yep, that lines up with the ranges. This is going to be a bit more significant of a pullback. And then if we look at our closing odds here, yep, now that starts to make sense to me. And then back up here to the close. So that would be my expectation for next week, given the current information. We'll see how these bars shift up or shift down and where the next week's drawings settle in going into next week. All right, let's do commodities. Let's do crude. Crude is quite bullish next week. Oh my god. Oh man. Again, we didn't hit these expectations of going this high up. But I will say that the expectations are still for some more positive drift into the close here. So I'll go ahead, put in a timestamp 2024 02 21. So let's go ahead and look at our highs. Actually, let's start with the lows because we're starting off with a bullish bias. So let's say down first, probably stay on the more conservative end of things. I want to move this one bar over like that. All right, now let's look at our high data. And quite a decent amount of highs here in this gray zone. You can see quite a decent amount. You kind of have a peak here and a peak here. But considering the bullishness, I'll go ahead and set my expectation to be closing up there. So this is in the 80 handle. Yeah, and you can see a lot of your closes are quite sticky to that high there. So maybe the lines look a bit more like that. And take that into a close. Again, we'll timestamp these tomorrow as we get our final closing values into the end of the week. Let's check out gold. Gold so far following expectations so far. It didn't follow these ones, but we did update them again. Just a nice little negative drift into the close. A bit less volatility than oil next week. And also a bit more conservative likely. So maybe a pop up Check out the lows. Yeah, this is going to be pretty hard low to estimate either. I'd say around here at S0.5, call it 2025, and down here at 2015. So there's two spots depending on how bearish you are. I'm not terribly bearish on gold. So let's go ahead and do a more nominal. These are the higher probabilities anyway. So let's just go with the nominal expectation. And quite a decent number of our closes are up there. Let's see if our closing probabilities line up. They sort of do, but they have a bit more of a bearish drift next week. So let's go with a more sideways expectation for now. Yep, that works. And now let's do crypto. So let's do BTC. And so far, it's following expectations. We had our up move and our down move. We didn't exactly hit the price, but we did get our positive drift. When we expected a rotation to happen, we got our rotation. Now the question is, do we actually hit these targets, or are we just going to do something like this, where we just continue to drift a bit lower and a bit lower? So I don't think there's a reason to change these things. And because there's extra trading days in crypto, I'm going to hold off on setting my expectations for the week ahead until we get closer to the 25th of February here. And I promised I'd put ETH in the rotation. I did have more bearish expectations. All this I would consider missed. All these are missed expectations. But the expectation I set 2 days ago on the more positive drift coming in on the month, right, closing in this spot here, that seems to be playing out. And you can see I got a peak here and a peak there. So I'm setting the expectation that we still continue to drift higher and that we will likely, in my view, close this month still above 3,000 on Ethereum. And I believe I covered everything I wanted to. We can check out how NVIDIA is doing. Yeah, see, there's the gap higher. We were looking at that on the day of the earnings. We actually listened to the entire earnings call here on stream. And it was quite a long one. But, you know, that's what happens when you listen to the earnings. And ARK seems to be just holding in there. Looks like our expectations are kind of getting met. I don't know why these two have the same timestamp, though. There should only be one line here. So for now, I'm just going to leave that like that. But the expectation, apparently, is to still close higher, closer to the $50 range here on ARK. And Apple seems to be holding up quite well. It'll probably end up closing more or less sideways into the month. I'd at least expected to close above 183, which is a very conservative call, but I'd expect it to close 183 and 187 this month. All right. I think that's everything I wanted to cover now. I'll go ahead and say thank you all for watching. This is one of the most watched streams since I've been back and streaming every day now. And I'll see you guys in the next one.